what people really should look at is, okay, how do I save taxes and how can I minimize my taxes? With proper planning, believe me, you can save a lot of taxes. So, in order to do tax plan effectively, that's probably the real question. How do you do that?
Welcome to Extraordinary with Chirag, my podcast. In today's episode, I am in conversation with Gurpreet Chatwal. Gurpreet is a renowned chartered accountant and he specializes in taxes. Therefore, we begin the conversation by decoding and understanding the entire taxation landscape here in Canada. We talk about tax planning for working professionals, whether it is permanent employees or contractual employees. We talk about tax planning for small business owners. In addition to this, Gurpreet shares four key principles to be a successful entrepreneur. I absolutely loved this part of the conversation. We also talk about real estate, of course. It is a hot topic here in every household in Canada. And lastly, we wrap up the conversation by talking about the importance of communication and networking. I hope that you enjoy the conversation as much as I did. Here is my chat with Gurpreet. Before we start, may I request you to please give an introduction about yourself to all the listeners over here?
Thank you, Chirag. Thank you for having me on your show. My name is Gurpreet Chatwal. I am the partner at Holly Chatwal and Company LLP. We are an accounting firm based out of Mississauga. My qualifications, I'm a chartered professional accountant, CA, and in-depth tax. So I specialize in this field of tax.
So obviously, the audience knows that I have somebody who is an expert in their field here on the show, and I'm excited to pick your brains on so many topics. But before we dive into all the millions of questions that I have ready for you, let's start from the basic. Can you please help me understand the tax brackets here in Canada?
I think first we need to know that there are two types of taxation. There's personal taxation and corporate taxation. And within personal tax, there's a misconception people have that I earn this level of income, I am in this bracket, and the entire income in that bracket is taxed at a particular rate. The answer is no. So we in Canada have, something called income tax with certain brackets, and within those level of income, which is called the graduated scale. So you're taxed on a graduated scale. So for example, what that means is the first $49,231 income is taxed at 20.05%. So then income between that and 53,000 and change is taxed at 24%. And income between that and 86 is taxed at 29%, and so on. And the highest bracket is 53%. So if someone makes, let's just say, $100,000, okay, and the bracket for that would be around 33%. That doesn't mean the entire 100,000 is taxed at 33%. So people who say, "Oh, I don't want to fall in the next bracket that I'll end up paying more tax," the answer is no. You're only going to pay more tax on the difference in that bracket, not the entire income. Whereas now we have corporations, right? Another cool thing about corporations is corporations don't have a tax bracket like this. It's just one flat rate up to the first $500,000 income, which is for small business. Versus if you made $500,000 personally, you would be paying a lot more because, like I said, the top bracket above 235,000 is around 53%. Everything above that is taxed at 53%, but everything below that, you've got these awesome rate graduated, scale that really factor in different tax rates. What people really should look at is, okay, how do I save taxes and how can I minimize my taxes? And that can be done within the Income Tax Act very, very well. How we do that is through tax planning. And if you have a good accountant, a good, person that you work with proper planning, believe me, you can save a lot of taxes. So in order to do tax plan effectively, that's probably the real question. How do you do that? And to do that, I think your accountant would really need to know you, really understand your business, and then build a proper structure around that with your goals in mind. So once I know someone's long-term goals, I can help create a proper structure here where we can defer income, minimize taxes, and use that tax deferral in a positive way to reinvest in the business.
That's insightful. One thing that hurts me every single time as a working professional, as soon as I see my pay stub, it hurts to pay so much amount in taxes, and especially when it is your bonuses and other increments that you're getting, those get slashed 50%. So let's dive into the working professional side of things first. How can they do their tax planning better?
Sure. So, working professionals is a very broad term, but let's define that in a little way. Uh,
Hmm.
we've got people who work on T4, which is salaried income, and then we've got
Yeah.
individuals who might be self-employed. We see quite a bit of people working on contracts these days, and there's different planning for each of these types of groups. Now, for someone who is an employee, which is what we call T4, salaried employee, their planning is going to be very specific to them. And for self-employed, very specific to them. And then, believe it or not, further defined, a tax plan for one individual may not be suitable for the next individual because it's based on several factors, right? And one of them could be, are you married? Do you have children, spouse? What types of properties you have, investment property? So in broad perspective, knowing the individual, their plans, their goals really, really helps to define a great strategy. Now, what are some of the tips I can give to people who are salaried employees to minimize their taxes in a general perspective? Could be, we know if you're a high income earner, right? That's always a concern. Like one of the first things I find is people tell me, oh, I'm in a high tax bracket and I don't want to make more money. It's going to be taxed at a higher rate. So the misconception I see is if you say I'm in the high bracket, the entire income is being taxed at that new rate, which is the misconception. It's only that particular part that's taxed at the higher rate. So that's really important to know.
That's
And
awesome.
with that comes the tax planning, is which I wanted to tell you. Let's just say
Hmm.
you make $100,000, and you know what? I say, okay, let's bring that little top part down. We can buy RSPs because RSPs is a deduction. That part that we're paying at a higher rate, let's bring that part down to the one block lower. So these are some of the things that really help. How RSPs are great. If they're depending on the individual, if it's, let's just say, a senior, we might want to split their pension income with their spouse, because if I can split some income with their spouse, I'm essentially lowering one of the spouse's income and increasing another spouse's income, which might be at the lower, tax bracket. So it's really very individual based, but there are some really, really good tips out there based on the individual. I hope that helps.
That helps a lot. And one of the things that you mentioned earlier is that when it comes to working professionals, obviously we divide it between employees and people who are entrepreneurs. So, what I would want to dive into over here is let's focus on the employees categories over here. Ones who are on a contract and one permanent employees. So, if you could give me some tips and tricks around what would be beneficial for people who are on contracts, and then what would be a beneficial tax planning strategy for people who are permanent employees?
Sure. So permanent employees, I get this asked a lot. Can I deduct expenses? The answer is no, you can't deduct expenses. Expenses, by definition, are only deducted for, again, someone who's a self-employed or anyone who has a genuine expense that was related to earned income, right? Now, in certain types of employees, there are employees who are on commission, right? And they are required to have certain types of travel expenses or entertainment expenses to earn that income. They would be allowed to deduct some types of expenses, provided they get, it's a form called T2200 from their employer that, says that, yes, these individuals do require these type of expenses to earn their income. Whereas self-employed, we have individuals, any expense you've incurred to earn that income is also deductible. Uh, where you have to be careful is you have to, you have to keep track of all these types of expenses. You need to keep these receipts. And if you're driving your car to visit clients, you should be keeping a logbook. These are all the requirements under CRA in order to be eligible to make these deductions. So for an employee, not everyone falls in the category of having, commission or certain types of expenses. This is where RSPs come in. This is where, making sure you've got your donation receipts, you've got your medical bills, childcare expenses. All these things help to lower your income and allow you certain tax credits where you could, further reduce your taxable income. And then there are so many other tax credits. Like this year, there was a new one, staycation. If you traveled in Ontario, you could keep that receipt. That would help. We've got people with disability. Well, maybe you're eligible for disability tax credit. So there's so many things out there. Again, like I said, it's very individual based. You need to really know the individual and advise them on certain types of deductions and credits that they may be eligible for.
That's really interesting to know and very insightful. Let me get a perspective and have a real life people who have side hustles. And like me, if this is something that I'm doing and we were to take in guidance from you, that Gurpreet, this is Extraordinary with Chirag is my podcast, and I want to create this as a business. And how can I leverage this entire space to be able to plan my taxes better? Would you be able to give me some tips and tricks over here?
Sure. So let me understand your question. You're right. There are a lot of people that have jobs, but they also have a lot of, you call it side hustle, another business or other forms of income on the side, which is great. And in your particular case, because you are self-employed, and if you are earning income through this business, then any expense related to earning this income is deductible. And that could include, I see some equipment that you have that would be eligible. The space that you use in your home would be eligible. So this might be a good discussion. Home office, right? Home office is a deductible expense in this particular situation. And how you would calculate that is you would have to take the total square footage of your home, total square footage of your office, and we would prorate that with all the expenses related to your home, right? And that's how you would calculate your home office expense. And if you're incorporated, it's different. If you're self-employed or sole proprietor, it's different. So it's really, there are so many important information that I would need to know more about you to give you that sound, proper tax advice that's really related to your particular situation. So equipment, I would say if there's travel involved for you to visit clients or visit studios, that would be eligible. Anything related to online marketing or advertising or hosting, all those types of expenses would be eligible.
Interesting. And do I need to register myself as a business to be able to be eligible for all these rebates?
So if you're conducting business, you are required to register a business. You're required to register a business. There's two ways to do that. One is through a sole proprietorship, and one is through a corporation. So a sole proprietorship is very simple and basic. It's really a business under your personal name, which is what we call sole proprietor.
Right.
Corporation is a separate legal entity, whereas the corporation is on its own, and it might be great depending on the individual, where they are, what the type of business they're in. Because when you're incorporated, one of the biggest advantages is tax deferral, right? Whereas any income you generate within the corporation, it stays in the corp, right? Whereas sole proprietor, any income you generate goes on your personal tax return. So, for example, this is where tax planning really comes into play. If you have a large income, let's say you make over $100,000 in the corporation versus $100,000 sole proprietorship, a corporation will have 100, and the tax rate on a corporation is around 12.5%, right? That's provided you don't take all the money out of the corp. It stays in the corp. The corporation pays for its bill. Whatever the net income is, it would pay a flat rate. Whereas personal, like we talked about earlier, there are tax brackets. So you would essentially be paying a lot higher tax rate personally.
Right.
Because even though, you've made all this income, and in both these situations, one is staying in the corp, and provided you don't need it personally. Anything you don't need, the goal should be to defer it, so at the lower rate.
That's such sound advice, and I'm already getting such amazing insights from you, and I'm sure that the audience is going to love it just as much as I am. So, from you've defined the difference between sole proprietorship and incorporated business. From what I understand, I am gearing towards registering as an incorporated business vis-a-vis registering my business under sole proprietorship, because I can see that there are more benefits in the other bracket as opposed to this.
What I would say that the next step for you would be, how do you pay yourself, right? If you've incorporated versus sole proprietor, if you've incorporated now, you also need some income to generate
Right.
your livelihood and pay for all your bills. So there's two types of way that you can collect from your corporation. One is through salary, right, which
Mm-hmm.
everyone's familiar with. Basically, you're working for your corporation just as you were working for a third party, and any pay you get, there would be CPP taxes deducted, and then the balance would go to you. So that's salary. That means we take the tax off as you get paid and remit to Revenue Canada. And the alternative to that is dividends. So dividends is another form of payment that can be given to the shareholder, which is the owner of the corp, right? And
Right.
the advantage of dividends versus salary is that you're not required to make CPP contributions, which is the employee and the employer portion. So there are some savings on that if if you like to go that route, and versus having to make monthly installments on payroll remittance as well. But there's a flip side to everything. So if you're not making CPP contributions and you're trying to save taxes, chances are when you retire, you may want some pension income. Well, you haven't contributed anything. So then you don't get CPP, or you will get less depending on how much you've contributed. So the art is finding that right balance. The art is knowing the individual. Where do they want to go? What are their goals? Maybe, the individual has very aggressive goals in the early years and they need to save this taxes and they want to reinvest it, and they will contribute to CPP at a later age, or they may consider investing in RSPs. So it really depends. Like I said earlier, it really depends on the individual and their goals.
Staying on this topic, there are a lot of people who would get contractual jobs, whether it is with companies or whatever they're doing. Would you recommend people should register themselves as an incorporation before they start getting this contract? What do they have to do in advance to be able to get these benefits?
Sure. So if you're an individual and you're about to sign a contract and the company's agreed to accept you on contract, which is what we call subcontractors, then you would need to first incorporate. I would advise incorporating. Second, registering for HST, right? You might be required to charge HST depending on the amount of your pay. So in Canada, just on that note of HST, if you earn more than $30,000, right, in business income, you're mandatorily required to register for HST. So HST would be a good idea to register. And then what you should do is figure out a schedule. This is very common that a lot of new subcontractors don't do, is they because they're not remitting taxes on a regular basis, they get this huge tax bill at the end of the year and they haven't budgeted for that. And so my advice is I would like you to remit quarterly an installment to the tax, right, for your corporate tax, and maybe even towards if you're taking dividends, also towards the personal tax installments, so that you're not taxed heavily at the end of the year. So budgeting is also important as part of the tax plan. So first step, incorporate, register for HST, and register for payroll if we're going to be giving you a salary.
Now, I have not registered anything, and this is my side hustle that I've started. Hopefully, at some point in time, it will start making money, but I need time to scale it to be at a level where I can get sponsors, where I can get income from views, which is AdSense from YouTube, etc. And then there will be a host of other services. Now, what should a person like me in this situation do that before I get my contract? Because then when I sign this contract, will the money come into my personal account, or should I have had set up that company where the money is going to come into that?
So once you are made an offer, okay, is the time when you should incorporate, not before. Because what if you incorporate and you don't get the offer, right?
Right.
So you have been given an offer. I would like you to incorporate then and give the name of the incorporation to the employer, then so that they can make the contract on this new corporation, not you. Okay. Once that's done, then you would be either issuing invoices from the corporation to the employer, and for which you will be charging HST as well, right? And they would pay that invoice, and that invoice belongs to the corporation. So the payment also belongs to the corporation. So you need to set up a corporation bank account. All that money is now going in the corporation, which is really important to know. Once that money is in the corp, now your question is, how do I pay myself? You have a mortgage to pay, you've got car bills to pay. So then you draw out only what you need. That would be my advice. So let's say you make $200,000. Well, guess what? You only need 100 to pay your bills. Why take out all 200? So I would say, okay, Chirag, take out only what you need. And the reason is because let's say you take 100 out. Guess what? Your personal tax is only going to be at 100, right? And the other 100 is at the corporation, and we're paying only a flat rate. So imagine a scenario where you take all 200 personally, then you would be taxed at a very high rate, right?
Yeah.
You're going through the bracket versus 100, whereas 100,000 you've only paid personal tax on,
Yeah.
and the other 100, the balance, or net income in this case, we would pay corporate tax on, which is flat rate. So I'd rather leave that money in your corporation, right, and grow that. Come next year, you make again money, you take out what you need. Let's say that pot is growing. That is called income deferral, because now we are paying a lot lower corporate tax rate. We've got this large money sitting in the corporate account. Now comes time, okay, Chirag says, I want to do some investments. Why don't we let the corporation do the investment? Why do I need you personally owning anything? So the corporation could go and buy a rental property, it could buy land, it could buy stocks, it could buy bonds. And now that income that it generates is also taxing the corporation and not you personally. So the advantage would be obviously to set up a corporation and only take out personally what you need. I don't want you to take out everything.
This is gold dust information. Thank you so much for sharing this. And building on to what you said, as far as expenses are concerned, if I am driving to work, my cell phone, or other home office expenditure, like you mentioned, I can get all this set off while I'm filing my taxes later in the year?
Good question. The answer is depends. Okay. Driving is another misconception people have. Oh, I drive to work, I should be able to write my car off. The answer is no. Okay, you cannot deduct the drive to work and drive back home. Because everybody does that, right?
Right.
So it's not really business expense, right? It's once you reach work, the driving you do from there to visit clients is eligible now. That's why the logbook is so important. Now, let's say you get to work, you now have to visit client A, B, and C, and you use your personal vehicle, and you come back. Well, if you document those kilometers, and then we would prorate the total vehicle kilometers driven versus work, and all the expenses related to your vehicle, we would prorate that and take it as an expense. That would be the right way to do it, because the entire car is not used for work unless it is. And then there are some very rare circumstances when, cars are used 100% for work. And that means they only use that vehicle for work and nothing else.
That's interesting. You touched upon HST, and you said that if we are uh, earning more than 30K, we should make sure that we register for HST. Can you explore and expand more on HST? Because I do feel that a lot of us don't have the in-depth knowledge. So let's try and scratch the surface a little more over here and get to know a little bit more about HST.
Sure. HST, as we know, is a sales tax, right? It stands for Harmonized Sales Tax. It's the combination of GST and the provincial sales tax. So that's HST. So HST is a requirement that you need to charge on revenue right? For every service you provide or every product you sell, there's an exemption that, hey, if your annual revenue is below 30,000, you don't need to register. You can just issue invoices on your sales or products and not charge HST, then you don't remit HST. But if your annual revenue is going to be over 30,000, you need to mandatorily register, right? So mandatorily means you a must regard. So in that notion, let's say, you just started your business, you should register for HST because the advantage is, you're going to collect 13% on your revenue.
Mm-hmm.
But on the flip side, which is the more important side, is all the expenses you incurred to earn that income, the HST you paid, I get to deduct that from what you collected. So there's a huge saving on that part. So I don't want you to get hung up on this $30,000 number. Forget that for just a second. You are going to set up a business. If you register for HST, all your expenses where you pay HST, you get to deduct that back. And the other part, there's a huge misconception with people. Oh, 1 year I'm at 50,000, the other is 30. I don't need to charge HST. No. Once you register for HST, it's continuous. There's no stop. Whether your revenue goes down or up, you must charge on every invoice HST.
Definitely an actionable insight. So if I have a company, or if I've registered in cooperation and I'm still not making money from it, will I still be able to defer some taxes, or will I still be able to save on taxes? Do I
Yes.
need to be profitable?
So the good news is you only pay tax on profit. So if you're not making any profit, the tax is zero. So the losses is what you're referring to would be carried forward. So in a corporation, we're allowed to carry forward the losses and apply it to future income. So when you do start making money, well, first we're going to offset the losses. And after that, if there is still any profit, then you pay the income tax on the net profit.
Thank you. I think that will help, and that gives me a lot more clarity on, and people listening a lot more clarity on how to go forward with this information and apply it to their lives. Building on to the incorporations and entrepreneurs, can you talk about some of the common financial mistakes that entrepreneurs make, and how can they avoid them?
So, I have had the opportunity to work with so many entrepreneurs over the years. I've been able to learn from people's success and what makes them different, why do they stand out, and also people who unfortunately didn't do well and why didn't they do well. If I may be able to sum it up to you in four key factors, if you follow
Mm-hmm.
these key factors, which I believe will really, really ensure that your business can be successful, right? And one is, I find entrepreneurs who work full time in their business have a high chance of success. You must work full time. Now, people who work part time versus individuals who are working full time, there is a difference, right? Now, second part to the success factor is adequate cash flow. Whatever your business needs in terms of cash flow to start that up, you need to provide that, whether you get a loan or whether you use your saving. If you don't have the adequate cash flow, then you're not really doing justice to the business, right? If it requires marketing money and you don't have it, well, then, the business may not function the way it really should function. The third is, I always like to say, you need to have the expertise. Whatever business you do, you need to either learn that business first, take a job in that area of space, or you need to hire the experts. If you hire the right experts, because then they can guide you through all the pitfalls through the business, what it may need and what are the success factors and how you drive this business. Or you need to have learned that through your, life of experience, whether you were an employee. And the fourth is you have to give it business 3 years. These are my few principles that I found over the years to be really, really factors of success. So if you want your business to be successful, you follow these four principles. Give it your 100% effort.
Mm-hmm.
Give it the adequate cash flow it needs.
Yep.
Give it the expertise it deserves and the 3 years of time. Because once you give a business 3 years and you're giving it full-time attention, even though you're making mistakes or you may not be making money in year one, guess what? Because you're so vested in it, you're going to start finding the flaws that you have and fixing them. With over time, you're going to find ways to create new revenue. You're going to fix all the issues that you didn't give yourself chance for. And there's a really good chance that after 3 years, you would have made it a success.
That's so profound, Gurpreet, and I'm absolutely in love with what you just said, because there are a couple of people who I follow before I started this journey myself, to understand, what are some of these pitfalls, and what are people who are successful, what are they doing. And one of the things I heard, this entrepreneur, his name is Alex Hermosi, and he's a rage on the internet right now. And he said, which really resonated with me, which is that we massively overestimate what we can accomplish in 6, 7, 8 months or to a year, and significantly underestimate what we can accomplish over a period of 3 years, right? We have to go through that grind of probably sucking for a while, making those mistakes early on, learning from them, and pivoting immediately. In fact, I had an entrepreneur on my podcast earlier as well. His name is Navjot Singh Bindra, and very interesting story of somebody who moved to Canada right in the middle of the pandemic, but has been able to create a huge brand for himself. And they're called Potato Talkies. And he also mentioned that you fail fast, you learn fast. And what you said over here, that you have to be committed to it 100%, because growth is going to be non-linear. There are going to be highs, and there are going to be lows, and you have to stay consistent through that. So thank you very much. I love these four pillars: that A, stick to the cause full time; B, have adequate cash flow. So for budding entrepreneurs not have the kind of money that they need, it will be cutting corners from somewhere. There is going to be a pool, so you need to prioritize. Expertise, like you mentioned, is critical, because you have to be aware of what field you're in. So you have to choose your niche. And within that space, like you mentioned, if you don't have the expertise, hire the right set of people, which is investing in your business. And of course, you have to be able to stand the test of time. So, beautiful segue into my next question, which is in reinvesting versus saving. You've gone through the grind, and you've burned the midnight oil. Finally, you see that the money is coming in. Instead of just holding on to it and saving it, what can they do to reinvest? Some strategies that you can share, which in the short or the long term would yield high returns.
Investments, there's so many ways to invest, right? People have got investments through stocks, bonds, people have got investments in real estate. And to my clients, I tell them, the investment is based on your risk appetite, right? And depending on your age, depending on the amount, it may be different for individual to individual. I don't think there is one formula that fits all. Now,
Right.
what I may advise people is, when you're investing, depending on what you do, if it's real estate, in this situation, you want to make sure you have leverage, right? You want to finance as much as you can, because then you're using banks' money to make money, right? I would advise you taking adequate loans, or whether it's, let's say you want to buy a condo and rent that out. Well, you would be better off financing that condo, maybe, to the maximum you can. And then that way your return on capital is going to be higher, because you've only invested, a certain amount of deposit. And as the real estate property appreciates, it's appreciating on the whole amount, whereas you invested a small amount. So that could be a really good way to look at it. People who have an interest in stocks, bonds, and the stock market goes up, it can go down again. So depending on the individual, if you have short-term goals, you might want to invest in less risk stocks, right? Maybe more dividend stocks, or maybe GICs or bonds. And if you can, have that time, and you can invest for a longer period of time, and then maybe you can invest in commodities. You can invest in particular stocks that are long-term growth stocks. So it really depends on the individual, and there's no right or wrong. They're all great ways of, investing. But should we invest? Absolutely. You are earning your money and, from your job or self-employed. That's really just sustaining your life. You want to create wealth, you need to invest. And I like the word you use, side hustle. I like that word. If you want to create wealth, you need to have investments on the side. And depending on your goals, you look at short term versus long term. That would really help you in the long run.
Not somebody who's a lot into stocks and bonds. I have limited knowledge there. So my question would revolve more around real estate, and also probably because it's a hot topic over here, especially right now in Canada with recently the interest rate gone up. What would be your go-to strategy that you would say in terms of investing in real estate?
So real estate is an amazing space. I like real estate as well. But I think, working with a professional is very important because you
Hmm.
may not have the real estate expertise that you think you have. So finding that right agent might be important, where they can guide you in terms of, okay, your goals are, let's just say you want long-term growth in terms of real estate, but it also depends on the money you have, the budgets you have. Therefore, you want to invest in the type of property you have. Right? One could be rental, one could be development, one could be land bank. There's so many types of real estate investments out there, and they really all depend on your investment and they depend on your goals. Land banking is very long term, where you can buy, let's say, farmland of 100 acres. Well, you might need to sit on it for 30 years, right?
Yeah.
And now 30 years, well, guess what? There's hardly any income coming. So is that the right thing for everybody? No, it may be the right for people who can afford to put money down and forget about it for 30 years. That's land banking. It's long-term investment with the right amount of capital. Then there's development. One below that, development is taking individual properties and having the expertise to take that through planning, zoning, and making something great out of that, and maybe even building it. It could be building, condominiums, building plazas. Again, that requires a lot of financing, a lot of expertise in terms of development. So you might want to have the right professionals on board who can give you that level of advice. You don't want to jump into this thinking you know how to do this and you will, pivot as you go. Well, there's absolutely no room for that. Then step below that could be, I have clients who like to buy, renovate, hold, and sell. That's a different strategy for real estate. That may be a little bit less riskier, maybe more for individuals who just have some experience in real estate but want to learn more about it. So there's people who make money on that, and then there's people we say, okay, just buy a property, sit on it, rent it out, and wait for appreciation and sell or refi. So there are so many different angles to real estate. It sounds simple, but it really can be, very, very individual based. For beginners, absolutely, you should not do anything without consulting the right real estate agent and telling them your goals, your budgets, and how you plan to.
Oh, absolutely. And like you said, there is no one strategy or one size that fits all sort of solution, right? It does depend on a lot of factors, your financial situation, like you, one second, like you mentioned, your appetite to risk and how much of it can you digest, and then really understanding what is your jam, whether it is looking at smaller properties or bigger properties based on the resources that are available. So that's really interesting. One of the things that I've been hearing a lot, and especially right now, this entire shift of suddenly Ontario not being as affordable as it once used to be. Toronto is expensive, GTA is expensive, people are moving farther away, and what the pandemic did was introduce remote working. A lot of companies still have employees working remotely, so they've moved out of Ontario. So there is a big uh, debate happening, which is Alberta or Calgary versus Ontario. What would be your take on that?
Yeah, so I do see a lot of people investing in Alberta right now because properties are a lot cheaper, right?
Mm-hmm.
So which may be great for people who have, let's just say, they want to get in the market. They don't have large deposits to make, whereas the prices in Calgary could be half of what we're paying on certain types of property here. That could be an advantage to get you in the market, right? But the disadvantages also should be considered. And one is, if you're renting it out and you're sitting here in Ontario, and if there's issues, how do you navigate that? So you may need to work with a company that could monitor that, but that may come at a cost. So you need to also factor that into your account. And the second is, more importantly, when you hold any property, we haven't touched on the tax side of this, is
Yep.
the capital gains versus business income, right? I think it's really, really cool to know you buy a property like
Yep.
you did in Alberta or in Ontario, and you sell it. How would this impact you? And can there be a plan around that? I think so. I definitely think so. So if you buy real estate and you sell it, within 3 months, well, it would be taxed as business income, right? Versus you holding that property for a long period of time, and your intent was to hold it for a long period of time, it would be taxed at capital gains. So you're going to probably ask me next question, what is the difference?
Yes.
So let's say it's easier to work with examples, right? If you had made $100,000 profit on a property, which you decided that you wanted to sell in a short period of time, that 100,000 is now going to be taxed as business income to your personal taxes. So that means whatever your personal tax income is, you're going to add another 100,000 on top of that, and you're going to pay tax. And that could be a big number. Whereas if you had the intention of long-term hold, right? You sold it over a period of time, let's say over a year. Now that 100,000, only 50% of that is taxable income. So only 50,000 gets added to your tax return, which is really, really important. So if you had long-term plans, depending on how big the gain is, there's some tax savings to be considered. So you need to
Definitely.
factor that into your plan.
Essentially, what people are doing when it comes to real estate is that you would want to have a long-term plan, and then it is important to know this distinction between capital gains and business tax, because it is important. At the end of the day, it's hard cash that you're losing out on, and you've worked really hard to be able to invest in that and make some money out of it. So thank you for sharing that. That's important, and that's profound. One of the things that I also wanted to check with you and talk to you about while we're on this topic is the fact that we have a lot of, and as you've seen, we have a lot of growing Indian and Asian population in Canada right now. You run a big firm and you have a significant number of employees that are employed in the firm. Some tips that you would recommend for newcomers who are coming into the country so that they are prepared for life in Canada?
So if I may break that question down into a couple of things.
Mm-hmm.
Newcomers, they come with a lot of challenges, right? They've come into a new country. They need a lot of advice, a lot of support. From a tax perspective, one advice I always like to give newcomers is, I would like you to invest in RSPs immediately, even though your income may not be high or low, because whatever RSP you're buying is not only a deduction on your tax return and helping you generate a refund, but we can use that towards the down payment of your first home, right? You're eligible to use your RSPs towards the first time home buyers. You might have heard that. So that's a really cool thing for newcomers. They should really look into that. In terms of developing their careers, my advice has always been that, whatever you're doing, I would like you to be an expert in that field. Okay. And why you want to be an expert? Because the moment you get expertise, that sets you apart from the rest. That could mean getting a designation, like become a CPA. Just don't become an average. Depending on everyone's individual thing. If you have the ability to, say you're a bookkeeper, but you have the ability to become a chartered professional accountant, I would highly recommend that. If you can become an engineer, if you can become an IT specialist in something, my advice to newcomers is look for that niche, look for that expertise. I want you to get that. I want you to strive for that. Because the moment when you become that expert, the pay scale is day and night. It really sets you apart from the rest. So that way you can now not only reap the benefits, but you can actually really, really grow quickly in this country. So look for that specialization in whatever you do. And that would be my first set of advice.
Hit the nail on the head. When we come from India, we are more generalists. We are like a jack of all trades and probably master of some. But over here in Canada, it's more about being specialists and literally honing the expertise and knowledge and experience within that one particular profession, business, or expertise that you should develop and be able to really charge top dollars for it. And that's what sets you apart from the crowd as well, right?
I would agree wholeheartedly. I think that that is where once you become an expert in something, you can obviously see the difference that people want to get your advice because you know that area very well, and then your pay scale or your remuneration would also significantly increase as a result of that.
Anything else that you'd want to share?
I get this question asked quite a bit lately.
Hmm.
How do we ensure that the next generation, our kids, are doing that will do really well? What profession should they go in? How should we guide them? What field do you recommend that people do really well in? And, I thought I share this with your audience. You know, I would say, to be honest, all fields do really well. There is no one particular field better than the other. What is the difference is that it's the individual. The individual makes all the difference. We've got clients who are in, let's say, medical practice, we are in real estate, they're entrepreneurs, they're into music, they're experts in their field and they do so well. It's not the field, no one particular field does better than the other. It is the individual and the drive that really, really makes all the difference. So all those parents who are thinking, okay, what area of study should we recommend for our children? And the answer is, please let them do what they think they're going to excel the most in. And then once they know that area, they will do really, really well in that space.
That's such a nuanced response. I guess this is going to resonate with so many people because there is this thing where people are always, there's so much of pressure. And I don't know about other cultures, but specifically Indian cultures, parents, and I'm not saying this in a negative way. We have parents who are extremely protective. We are privileged, in fact, to have parents who are protective and are so concerned about our futures. But at the same time, there is that pressure, added pressure, that comes on to kids, right? That I need to make sure that I know my niche, or I'm clear about what I'm passionate about, or I need to drive the family business forward, whatever that may be. But it's not the profession, it's the individual who makes the difference.
Absolutely. And I may add there could be some guiding principles and tips that we could add as well to help more success to our children. And one of them is that I would say allowing children to take up jobs early on is really important because there's a skill, and the skill is, managing money. Skill is communicating with people. So, you know, I know a lot of parents can afford that the children don't need to work while they're in school, but I think it's not for the money, but we should encourage children taking up jobs at an early age. When I say children, I'm talking about, you know, children age of 14 and over, right? But it's a skill that we want to develop. So my request or my suggestion to parents is let's build some of these great skills, communicating skills, financial skills of how to save money, how to invest, and then even investments. Talk to your children about the investments you're doing, why you're doing them. We want to build their horizon. We want to give them these skills. I think that is the most valuable thing you can do.
Genuinely, I think it comes from such a good place that what you've shared, that this is what will make the future generation even more successful. And I want to touch upon one particular thing that you said, communication. And what I feel is, I am passionate about our community and a lot of people who are coming in. Communication probably is the biggest deterrent in not being able to network as well as they should be, because we do come in with probably this in mind that, our accents are different, maybe our English isn't that great, but what I've seen is that we also, because you don't know this, there are also so many people from so many different countries coming in, and they do not have impeccable grammar or pronunciation or accents, but they're still networking. So I want to get your advice on how critical is networking here in Canada for people who are immigrants, for people who are already as working as employees or businesses. How critical is the skill of networking?
A wise man told me, your network is your net worth. And so networking is so important. Not only does it help you solve so many problems that you may face, because through your network, you can get that sound advice. You can get that, level of support that you want. So building networking is key. It's very, very important for newcomers. And it's very important for existing people here who've been here for a very long time and they want to strive for greater success in business. Build your network. I think network is your net worth.
That's a mic drop moment for me here and everybody listening. And yes, I couldn't agree with you more. And language should not be a deterrent. Yes, if we are coming to a new country, it is our responsibility to, and the minimum requirement for us to know the language and improve on it. But that is not a deal breaker. It has to be that you need to proactively find those people who are ahead of you in that journey and understand from them the lessons that they've learned along the way and the wisdom that they can share with us.
So I want to add one thing.
Hmm.
Like anybody who thinks that, let's just say, their communication skills or their English is weak, I believe your confidence is key. If you speak with confidence, people resonate with your confidence. If you lack confidence in what you say, then people see that lack of confidence. So believe in yourself. You will come across as a champion. That's all that matters. You have the confidence in how you communicate and what you say will transcend to the people who are listening. So that is probably the best advice I can give.
I love it. And you would not believe it. My last post on LinkedIn was from my mentor, and he had a saying that confidence is half the battle won.
That's it. It's so true. It is so true.
Awesome. This is perfect. On to my last part of the podcast, and this is some light-hearted stuff, but it's called My Drift. Here it goes. First question: qualities and traits that you've seen in millionaires.
I would say drive. They are driven people. The highly successful individuals know exactly what they want and they work really hard to get that.
Um, One skill that you would say that everyone should develop.
Communication skills, I think they're very, very important. With good communication skills, not only can you, negotiate, but you can also get your point across. You can, you know, communicate much easier and more efficient. So communication, in my opinion, is one of the key skills.
Let's talk to you about investing, and this is your preference: real estate or stocks.
You know, I would say combination of the two would be ideal for me personally. Real estate is the passion I have. I
Hmm.
think diversity is very important from a risk perspective. You don't want to put everything in one basket. You don't want everything in real estate. Like you and I are currently seeing, there's some, tightening in real estate interest rates. So having diversity in any kind of investment is really important. So diversity of real estate and commodities and stocks.
Your best investment till date, if you don't mind sharing that?
My best investment. I have so many investments on the go right now, but it would have had to been one of the real estate investments that we picked up just before pandemic. And as you know, during pandemic, real estate did really well, right? And and I would say one of the real estate properties during that time has really done well. But one point I want to add about real estate is I think
Hmm.
it's because we really buy with emotions. And if I may give a tip on buying real estate for investment purposes, buying it as a home for where you want to live is a totally different, thing. But investment, you got to take the emotion out of it. You have to evaluate it purely on business. And I find that is easier said than done for a lot of people. So just look at it from a pure economic standpoint. Do the criterias all check off? If they do, then you don't, then you need this. And then negotiating, your good communication skills really come into play. And emotion, if you really like a property and it's not meeting the budget you want, you need to walk away. You can't let your emotions get in the way and, pay more than you really should. So investment in real estate has to exclude emotions.
That's a great piece of advice. Thank you for that. All right. So, one last thing, Gurpreet, before I let you go. I know that you're somebody who has abstained from the entire world of social media. So, we can't really get hold of you on any of the social media platforms just yet. But I know for a fact that post this conversation, a lot of people would want to know more about you and your organization. So, but is there any other channel that they can use to probably reach out to you, and especially the ones who would want to come and talk to you more about tax planning, financial planning?
Sure. I would say, our website would be a great tool, right? We have contact us forms through that, or, even maybe sending an email to our firm where we can dedicate some time to people who are looking for some kind of a tax advice. And I think website and email and our form would be the best options to communicate. As you know, accounts are, working day and night. You know, just be patient and give us a little bit of time to get back to you. I would appreciate that.
Perfect. This has been absolutely amazing. And I can't thank you enough for coming onto the show. I have an inkling that we will be doing more of these because there's so much that we haven't still covered. And we would want to pick your brains more about better tax planning, how to make better financial decisions. So I look forward to having you again on the show. And thank you for the time.
Thank you, Shirag. I want to say you're doing a great job in putting something like this for our community and the audience on the World Wide Web. So I want you to continue doing this, and I wish you a lot of success in this adventure. Thank you.